Alright, guys, so let's talk more about Canada and how the Western economies are fragmenting. Trump isn't in office yet and he's unleashing a wave of chaos up north. Just yesterday, we talked about how Trudeau's government is in panic mode. The incoming tariff has left Canada extremely exposed and vulnerable. Nearly 80% of Canada's exports head to the US. A tariff war could wipe out a huge chunk of trade, especially goods with razor thin margins here. This chart shows us the sectors most vulnerable to a Trump trade war. Machinery and transport 26% to the US, mineral fuels 85%, manufactured goods 61%, and chemicals 75%. Over $400 billion of trade is at risk here. And as we said before, Canada's trading ties with other countries like China or the EU aren't established enough. So Trump's coming in like a wrecking ball. His tariff could spark a big exodus of major industries. Just like the situation in Germany, big machinery and auto plants could be forced to relocate to the US. But there's another problem with the tariff war. Because 80% of exports go to the US, Canada collects a ton of dollars from their US trade. And if that dries up, Trudeau will be facing a currency crisis. It will be an economic emergency. In the past, the Canadian dollar or the loonie was strong against the reserve currency. It even went past parity over a dollar at one point. But as the US economy grew and became more self sufficient, the value of the loonie collapsed. So imagine what would happen if Canadian goods stopped flowing into the US. The amount of US dollars entering Canada would also dry up. Even if exporters could sell elsewhere, profit margins would collapse. You'll still get a chronic dollar shortage. Now, the cost of imports would fly up. Canada's biggest imports like cars and auto parts will get more expensive, and that in turn would clobber their manufacturing sector even further. So it's one doom loop spiral. That's the cost of relying on one single trading partner for everything. Now, that might have worked during Biden's term, but Trump, well, he's going to smash everything into pieces, and things just got worse. Canada's finance minister just threw the letter and resigned. So now there's a political problem amid the financial storm. She disagreed with Trudeau's direction and is calling for Canada to keep the fiscal powder dry. This is an important statement. Canada has a fiscal crisis and they will need to deficit spend their way out of this mess in 2025. It's critical we analyze Freeland's resignation letter because it tells us Canada is fast approaching a crisis. And here are the salient points. Keeping our fiscal powder dry today so we have the reserves needed for a coming tariff war. This means pushing back against America First economic nationalism to fight for capital and investment and the jobs they bring. So Freeland knows Trump plans to shift global industries back to American soil, and the US is weaponizing the size of their consumer market backed by the US dollar to make it happen. Canada's debt burden isn't that ridiculous yet. Their debt to GDP is around 50%, and that's less than half versus the US. In addition, Canada's deficit in 2025 will be less than $50 billion or 1.6% of GDP. However, the problem here would be the trajectory of the deficit. If a trade war happens, Canada will have to borrow and spend more money in the economy. Trudeau would have to give bigger subsidies or run a much hotter deficit. Neither is good for Canada in the long run. We can immediately see the damage done to the Canadian bond market here. Yields are soaring higher. The currency also collapsed to a 4-year low against the US dollar. Trudeau is planning on slapping an export tariff on commodities like oil into the US. But if the US gets their supply elsewhere, Canada would suffer from an oil glut or oversupply, and that would drive down energy prices and oil producers will be in a world of hurt. But the solution is actually quite simple. If the US is going protectionist, Canada should build trade with countries in the BRICS. They have to restore good relations with China. It might be a hard pill to swallow, but options are running out. And we've seen this chart before, but it bears repeating. It's clear that BRICS will be leading the world in global growth. The world's average is around 3.2%. All the G7 economies have growth below that, especially Europe, which is hardly even 1%. But just look at BRICS, India at 6.8% and China at 4.6%. And with growth eventually comes higher consumption. As the US goes protectionist, the only reasonable counter is to globalize your economy. And that means getting in investment, foreign investment, also means exporting to more countries outside the West. So there is a way out of this trap, but it really depends if Canada is willing to work with the BRICS, because when you do, good stuff tends to happen. Which brings us to what's happening in Europe. By now, it's obvious that the EU is entering a period of economic stagnation. And here's how bad things are. The EU economy will grow by only 0.9% a year all the way till 2039. And that's 15 years of horrible growth. The energy equation still isn't solved. Conflict with Russia could last for much longer. And you throw in a tariff war from the US, Europe is essentially trapped. And Spain is starting to buck the EU trend. They are finding a way out. Spain was one of those few countries that opposed the EV tariffs against China. And now the Chinese giant CATL is building their battery plant in the country. And this is a venture with Stellantis and is a 4 billion EU plant. It's a lot of money involved. And this is a step towards Europe making their own batteries. For the Chinese giant, this also makes a ton of sense. Spain is going to use money from the EU Recovery Fund for this building, which is over 700 billion euros strong. Spain also has the highest car production rate per employee in the world. In other words, Spanish auto workers are very productive. And if this continues, we could see Spain grab market share from the Germans. So we are witnessing a divergence in fortunes within Europe itself, and more importantly, how Chinese companies are making inroads into Europe. Now, you contrast this with the situation happening in Germany, companies are leaving and consumption is collapsing fast. The finance minister has been fired as Scholz is struggling to stay afloat. And in a shocking report, it seems there's no way out now. Germany is unraveling. High energy costs and slumping exports have made German households poorer by 2,500 euros. After 5 years of stagnation, Germany's economy is 5% smaller versus pre-pandemic growth. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. The drivers for a strong German economy has turned into major weaknesses, and 3 out of the 4 drivers are getting progressively worse. Energy prices are dragging growth down. Global demand for German products is getting more negative each passing year. Domestic demand has also gone from stagnant to negative. In other words, people don't have enough money to spend. The issue here once again is the doom loop. As Germany loses more manufacturing companies, layoffs happen. The Volkswagen situation is a classic example. The restructuring itself could cause a $20 billion impairment. So salaries will collapse. People will start buying less and living standards will start to erode. And there's no escape hatch here. It's very unlikely that Europe will continue fighting the Russians in 2025 if the Americans leave. They simply don't have the financial capacity to do so. In fact, they probably want to turn back on the Russian gas supply. And at this point, it's all about pure survival. But let's talk more about Canada's trade war with the US. And just like the US economy, the private sector isn't doing well. The tariff war is only going to clobber private businesses even more. Canada's jobless rate has jumped to 6.8%. Unemployment is at its highest in 3 years. And get this part, out of the 51,000 new jobs created, 90% of these positions were in the public sector, in other words, government jobs. It's the same situation as previous US job reports. The private sector is languishing and unemployment should be higher if not for government positions. Now, when I first saw the numbers, I couldn't believe it, right? It's obvious something is broken in the system, and this is another signal of a global slowdown. Unemployment is trending up towards 8%, towards the 2020 lockdown levels. Then we have youth unemployment, that's also flying up to nearly 14%. And let's not forget wage growth. It has collapsed to 3.9% in November, a big drop from all the forecasts. So the situation is only going to get worse. The value of the loonie is plummeting, which causes imported inflation to rise. Bringing rates down now to save the economy could really spark a bigger inflation crisis. And with Freeland gone, it's going to be that much harder to counter Trump's trade war. In a resignation letter, Freeland mentioned how Canada has to stop political gimmicks. The government, for example, gave a 2-month sales tax holidays on items like toys and Christmas trees. That is a political gimmick. They also sent $250 checks to millions of Canadians. You can call that a gimmick as well, but it doesn't solve the underlying issue. The exposure to the US economy is just too enormous. If the US sneezes, Canada will catch a cold, and there's no working around that fact. And if we put all this information together, it looks like Canada will have no choice but to ease sooner or later. And that means bigger deficits and lower interest rates if push comes to shove. So you have yet another major economy on the brink of easing, which means bigger pressure on the Canadian dollar. Year to date, the currency is down by over 7%, and it's likely going to get worse as Trump enters office in 2025. Long term, it's obvious that Canada has to diversify trade to maintain currency strength. But it doesn't shock me if Canada is forced to dump their treasury holdings to rescue the loonie. They have nearly $400 billion of US bonds as reserves, so they have some firepower to protect the currency. But of course, selling this would send a nasty message to the US. So it's not looking good. Trump isn't in office yet and he's starting to wreak havoc with just the threat of a trade war. But let me know what you think. Does Canada have any bargaining power at all? And which EU country is next to break ranks? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.